Good morning, and thanks for joining us for this Arrow Minerals investor presentation. I'm Paul Armstrong from Reed Corporate. Judging by the big number of people who have registered for this webinar this morning, there's clearly immense interest in what is a rapidly emerging story at Arrow Minerals. Arrow must have what must be one of the most desirable addresses in the global exploration business. As the name suggests, its Simandou North iron ore project borders the massive Simandou iron ore project being built by Rio Tinto and its Chinese partners in Guinea. As you're about to see, Simandou comes with huge rail and port infrastructure, and this is something which features prominently in the Arrow Minerals story. A handful of holes have already been drilled on Arrow's side of the fence, and it shows there's clearly iron ore there. The question is just how much and of what grade. Arrow's about to embark on an extensive drilling program, which could be an absolute game changer for the company and its shareholders. This drilling program is being run by David Flanagan, the new Managing Director of Arrow. David barely needs any introduction. Suffice to say that he's the founding Managing Director of Atlas Iron and has held several other senior executive roles in the resources industry since then. David is about to go on a site visit, among other things, to Simandou North, where he will oversee the drilling program while meeting various people and doing all the things that David does so well. Upon the end of this presentation, David is happy to take questions. So if you'd like to ask a question, please click on the Q&A tab and send it through, and we'll endeavour to put as many of those as we can to David at the end of his presentation. Over to you, David.
Yeah, thanks very much, Paul. And thanks to everyone for taking the time to jump on this webinar and send through those questions. It's fantastic. So, look, I'm just going to talk briefly to this cover slide and provide you a bit of an update on our project, why we think it's fantastic, what we're going to do about it, and why we think that's good for shareholders of Arrow Minerals. So anyway, this cover slide, this is a photograph of the Conakry port. And in there you can see a loadout facility for bauxite. Guinea is the #1 exporter of bauxite in the world. Maybe you don't all know that, but it basically does about 25% or 11 million tonnes a month is what it'll do in January, and that will be a record month. Absolutely fantastic. So there's a strong mining culture in Guinea. There's a strong understanding of bulk commodities, and it's kind of natural that would transition into iron ore, and the country has an amazing endowment of iron ore. And if you're fishing for iron ore deposits, this is a great place to put your line in the water. So there's a few messages I want to get across today. These are things that you just have to know about our company. The first thing is that our tenement is absolutely along strike from the largest undeveloped high-grade iron ore project in the world. Make no mistake, if you convert the value of those iron units that have been drilled and reported in the ground, it's worth 1 trillion Australian dollars in the ground. And those deposits start 15 kilometres south of our boundary. The ore in that part of the world that have been reported by these guys is so high grade, it presents real opportunities for green steel, highly competitive products, and a real cost-effective ability to supply that market really in any foreseeable market. The parties who own those assets, the 4.6 billion tonnes at 65, includes Chalco, the winning consortium, and Rio Tinto, are part the way through a massive infrastructure spend. It is 670 kilometres of rail, a port, and a mine. All up, that's about $27 billion US, or $40 billion Australian. And I'm going to show you some pictures and give you some update, but that is a massive spend. And it's been ongoing now for more than a year, and there's been a lot of work done. Those deposits, which underpin that infrastructure and have attracted all of that capital, are hosted within what's called the Simandou Iron Formation. That formation has been mapped onto our tenement, and we've mapped approximately 40 kilometres strike of that geology on our ground. It's been mapped, it's been drilled first pass, there's been 16 shallow holes drilled into it, and we've hit 12 meters at 60%. So we've found the geology. We've found some high grade. Now it's time to close the loop, continuing to cycle through that loop of what we've learned to grow our potential, grow our targets, ultimately deliver resources. We have 2 rigs booked to hit the ground there in February, and we look forward to reporting on those results. And ultimately, we're not doing this for fun. We want to make a difference in the community where we're operating and deliver very, very strong returns for shareholders. This is what the board and management team will look like post-completion. Jeff Dowling, he was with me on the board of Atlas. He's on the board of NRW. He's a very, very seasoned professional. He's absolutely outstanding. We've got Tommy McKeith, who was previously executive director at Goldfields. Everyone knows what he's done. He's been outstanding for that industry. And we've got Alan. He started iron ore mines in the Pilbara, and they've been very, very good operations. And we've got Marcus down there. He actually does sprinkle iron ore on his wheat bix in the mornings. And Musa, basically that guy knows everyone in country. He's a problem solver, and he helps translate very effectively and with a lot of sensitivity exactly what we want to achieve for the local community over there. This is a map of Guinea, just so that you know kind of why I'm so excited. If you're going to go looking for iron ore, you start in a province where there is proven endowment. Okay, so we've got geology where the biggest undeveloped high-grade deposit is in the world. And then you need infrastructure. Well, right now, these guys are building a 670-kilometre long railway line and a massive port, and they're building the mines at their sites right now. So I think that makes for all the right ingredients to get in there on the ground. Here's a couple of snapshots of infrastructure that's currently being built. Now, that image up there on the top left, that's actually a 3D image. I'll show you how that's looking at the moment. But back a slide, please. Okay, there you go. You've got the top middle one there. That's a rail bridge and a new road. The bottom there, that's the berth where they put in the foundations for the new port at Morabaya. And then on the right there, you've got some foundations for rail bridges as part of that 670-kilometre sequence. This here's a Google map of the port. That's around about 1.5 to 2 kilometres by a kilometre. That is a massive piece of infrastructure that at the moment they're using it to receive project cargo for building rail and tunnelling and mine infrastructure. And that will be where they load out and export all of the iron ore. And by the way, the rail and the port is multi-user infrastructure. And we're very grateful for the government of Guinea, who own 15% of all mines and all infrastructure, for making that a crucial part of building the system. And here's, just to give you an idea of how much has been done, the project is being led by the Winning Consortium and other Chinese partners with Rio Tinto. And at the outset, they are building double track rail. And what you've got here, this is a 7-kilometre double track rail that's already been built. This is huge. So, in the Pilbara in Western Australia, a lot of the rail is now double track. But in most of those cases, it took 60 years. 60 years for those majors to implement that level of capacity on those railway lines. Here, it's going to be double track from the start. So when people talk about this project sustaining 200 million tonnes per annum in iron ore exports, I suspect that's just the beginning. This railway network will be able to sustain substantially more than that, as will the port in its capacity to expand from its current position. Getting through to our project. So here on the right there, you can see the Winning Consortium tenements and the Rio tenements, and you can see the railway line. That the dual track multi-user rail comes within about 20 kilometres of our tenement. So you've got the geology, runs north onto our tenement. We've mapped it, we've drilled it, we've found the enrichment, and there's a railway line that's going to land within 20 kilometres of our project. Now, 20 kilometres, if you're sitting in the city, that looks like a long distance, but geologically and in the Pilbara, in a mining industry, that's like a stone's throw. That is, you can see it, you can hear it, you know it's there, and I'm very excited about that. So immediately south of our tenement, we joined the winning consortium tenement, and the same geology that hosts their 1.8 billion tonne reserve to the south, that geology runs onto our ground. We've drilled it there, and we got 12 metres at 60%. So we'll be looking very hard at that tenement to the north, and we expect to find more iron ore over time, and we'll report about all that. So this is a zoom in on our tenement, showing the winning deposit to the south. So it's actually 15 kilometres from the tenement boundary to one of the biggest undeveloped high-grade assets in the world. There's an amazing endowment there, and both of these companies, Winning and Rio Tinto and the Simfer joint venture, are highly conservative in the way that they report resources and endowment and reserves. They take a long time, and I would suspect that the endowment of the mineralisation here, based on what we know about our geology and theirs, is many multiples of what they've got. I see they have enormous potential, and over time, I think that we all know you don't need 65% grade iron ore to access the market. In fact, out of the Pilbara, we sold 54, 55% a lot of the time. So I would expect the economies of scale offered by those projects will over time allow them to drop their cut-offs, increase their production level, and make substantial returns. And whilst we would like to have 65% grade material in our tenement, we won't be relying on that to sustain an operation if that's what we find. We've gone in here and we've tested those 4 targets in the southeast corner of the pocket with those 16 holes last year, and we confirmed the geology, and yeah, we got that 12 metres at 60%. So coincident on this map here, what I want you to see is that we've got the banded iron formation is that blue-grey bedrock coming up through the tenement from the south. And on overprinting that, we've mapped where you can see that red hatching. That's what we call enriched BIF. So something's happened there, whether it's a weathering profile, or it's a product of accumulated weathered detritus, or whether it's some sort of structural feature. That's all to be tested by drilling. Now, this is only a very small part of the project. It's worth pointing out that if you go and have a look at the Rio Tinto December 7 or December 6 announcement on their resources and reserves, there's a section there which shows an entire ore body that's about 800 metres wide and about 250 metres high, and the whole thing averages 60 to 67% Fe. Something like that generates about 500,000 tonnes per linear metre. 500,000 tonnes per linear metre. And that didn't include any of the lower grade material. That is an amazing ore body. Now, I'm not saying we're going to have anything like 500,000 tonnes per linear metre on our tenement, but the point I'm trying to make is that on our 40 kilometres of strike, if we stumble across cumulative 1 or 2 kilometres of strike of high-grade mineralisation or ore-grade mineralisation, we are away to the races, and I think shareholders will be rewarded. But our first 50 holes will start, and we should start seeing results out of there May, June this year. And this is a zoom back showing the whole tenement. And the point I want to make here is those 4 targets where we had the mapped enrichment over the BIF was just in that southeast corner. We've only tested those, but we've also now mapped enrichment over pretty much, to some extent, all of that surface BIF. So the role of a geologist, for those of you who don't know, is first you find a province that's got a reasonable chance of getting endowment, and you get a tenement. And then on that tenement, you go and find the host rocks that have a good chance of hosting the types of ore bodies you're looking for. And then within the host rocks, you go and find those areas that show indications of enrichment. And then within those areas of enrichment, you go and test those areas that you can most cost effectively access and drill as quickly as possible. So what was done first is that they basically went in and drilled the first lot of scout holes to prove that geological model. They hit it, they got the grade, and now it's our job to work our way through and systematically test everything we need to test. And that might mean in some cases we've got to now cut the odd road through or bring a larger rig in or do whatever. And that's what I'll be spending some time studying when I get to site, when I fly out of here on the 27th. But it's an amazing project. So look, in summary, we've got unbelievable rocks that are supported by the most amazing infrastructure. And, you think about that, $40 billion. How often do you hear about someone going out to spend 40 billion Aussie equivalent on building rail, ports and mines? It's just unbelievable. And I just feel so privileged to be a part of it. And we've got a good team who've been involved in the iron ore industry. It's not a stranger to us. We've sold cargoes before. We've built mines before. At Atlas, to give you an idea, we built 5 new standalone operations in 5 years. There are people out there who are currently being trained by all those companies in country. There's going to be a massive pool of expertise. There's going to be massive capacity on infrastructure. And we look forward to getting out there and making it all happen. Now, look, there's a snapshot of us engaging with the people there. There's going to be dividends paid to them all through this project, through the government and to the local community and through jobs. But that's basically the presentation, Paul. I think I'm probably good to go to questions if there's any out there. I hope there is. I feel bad if there's not.
No, don't feel bad, Dave. There's a few questions of a wide-ranging nature, I might say.
Yeah.
No particular order here, Dave. One viewer asks, you are no doubt at some stage going to consolidate the share capital. What's your plan for this, if indeed you're going to do it?
There's absolutely no talk of doing that. There's no plans at all. So it's not planned for the foreseeable future.
And a cheeky viewer note says, David, you're a well-known geologist. Does this mean you'll be working on the drill rig when you get to Simandou North?
Look, it's been a little while since I've worked on a drill rig. It might not be the best use of my geological skills, and I've got to say Marcus is much more up to speed on this, having spent the last 15 years doing iron ore project feasibility studies in West Africa. But I'll definitely be there when core's coming out of the ground, and I'll get as excited as the next geologist when it looks the way I want it to look.
You're not saying you're too old to change rods, are you?
Actually, that's all. I think it's a lot of it's done with it's all mechanized these days. But I'm not too old. Absolutely, might I need some practice? Yeah.
Changing tack again, David. What are the milestones that Arrow needs to meet its farming agreement to get from 33% of Simandou North to 100%?
Actually, I think we only need to spend probably less than $1 million on the ground and pay $1 million in cash or shares, something like that. It's definitely not more than that, and this program will well and truly exceed that spend. So that'll all happen pretty quickly. Mind you, we still have to get on the ground and drill the holes and spend the money.
A viewer asks, David, given your Atlas experience dealing with larger companies, have you spoken with any of them regarding this project?
Yes, we have, and just at a high level, because I'm not quite managing director yet. It's still subject to shareholder meeting, and I don't sort of go into these meetings representing the company just quite yet. But we've had some good informal conversations, and that's probably all I want to say right now.
David, you spoke about what's on your side of the tenement boundary. Can you give us some more information about why you think there is iron ore there?
So I suppose it sticks out of the ground in large chunks. There's several kilometres strike of stuff there, which if it was in the Pilbara, I'd I'd actually feel pretty comfortable saying that it looks like we could mine this. It's not in the Pilbara. The geology is a bit different. Back in the dark ages of Gondwana land, Paul, West Africa used to actually join to Brazil. And Brazil is one of the other great iron ore countries. So we think that the ore bodies will perform in a similar nature. But basically, the combination of seeing it sticking out of the ground, we've drilled some holes into it, looks like iron ore, tastes like iron ore, smells like iron ore, went through the lab, came back with 12 metres at 60%. That looks like iron ore. They're all pretty good indications.
One other question, David. What will you do when you get to Guinea?
I've asked for a couple of meetings with some government people involved in running the joint venture on the rail and the port. Also, someone in the Ministry of Mines to introduce myself, sort of outline our plans for the business. Just sort of like just say, look, we've arrived in town. This is what we're going to be doing. Then I'll get out to site, and go sort of meet a couple of the local people there and introduce myself. Have a look at all of the core, meet all of the team. Go and have a look at all of the prospects where I can get on the ground. Have a look at where all of the holes are planned, and where I can go and stand on the ground. Have a look at the drill rig. I'm not quite sure if we'll be drilling yet, but it'll probably be on site. And then sit down with the team, talk about our aspirations, and then sort of see what we might expect from each of the holes. Talk about what success looks like, and then leave them with it.
Of a similar vein, David, a viewer asks, regarding the upcoming drilling, is there any way to minimise dry hole risk?
A minimise dry hole?
Yes.
You mean like a duster? Like
I assume that is the nature of the question, yes.
Yeah. So we at the moment, we think we'll drill about 50 holes. And we'll have the benefit of the geology that from the last 16 holes. And the last 16 holes were drilled blind, and I think 4 of them hit plus 55, 58% material. So they had a 25% success rate. So I suppose we've got Marcus in there, who's an outstanding geologist. Some people think I'm a reasonable geologist. I'll get in there and have a look at it as well. And we'll do our best to plan those holes based on the outcrop, based on the geology of the previous holes that we've drilled, and we won't just look to duplicate, results that we've got. What did we learn from this hole? How can we use that to identify strike and depth extent of this mineralization? What else have we got an outcrop that looks at least as good as this, if not better? If we were going to intersect an ore body, how could we demonstrate the scale of that as quickly as possible? If we wanted to develop our own internal targeting system or external targeting system, how much information do we need to communicate that? If we were looking to develop a mining operation, what other considerations are there that we need to make? Do we want to collect some samples for more metallurgical test work so that we can send to customers to see how it might perform in a blast furnace or a direct reduction furnace? Or do we want to look at different ways of processing the product before it gets to the customer? There's no way to guarantee you can get something in every hole. I think it'd be a brave geologist to say they can guarantee what you're going to get in every hole. But if we're going to go in there and drill 3 to 4 times more holes than we did last time, and we've got the benefit of all of that geology, and we're working hard and we're as passionate as hell, and we've got some good people, I'd say we're a good chance of hitting something.
Now, here's an interesting question, David. What is the relative additional shipping cost to major markets from the West Africa coast? Now, I could probably be so brash as to summarise that maybe perhaps by asking you, how much more would it cost to get a ton of iron ore from Simandou to China compared with the Pilbara?
Yeah, that's a good question. I don't quite know what the number is, but it's not a limiting factor. it's probably something like an extra $5 to $10 a ton at most, something like that. I'd have to go and check that, but I would expect it would depend on what size ship we ultimately load, what our ship loading costs are, what our transport costs are. But that's just a bit of a guess to give people a bit of a feel for a product that's currently selling for, like the 60% stuff is selling for about 130 US a ton. I'd say 65% product would sell for 10 to 15% a ton more than that. Freight, probably the freight burden might contribute 5% extra in costs.
Now, this is a genuine question.
Of your revenues. Go on, sorry.
This is a genuine question, so it's rather open-ended. It's not a Dorothy Dixer. So how huge can this become? Where can you see the share price in 12 months? Not sure that you're allowed to answer that one in any detail, Dave.
Yeah, so you'll see that one of my performance hurdles is 50 million tons, plus 60%. I reckon plus 50 million tons is worth about $10 million in situ in the ground, and that compares to probably a 3.5 million ounce gold deposit at 2.8, something like that. So, and if you compare that to what they've got on those tenements to the south, that's a crumb. That's just like, what the elephant had for breakfast the day before as it's walking past, right? It's just relatively tiny compared to what they've got, but it is enormously valuable for a company like us. Now, I would expect there's a lot of potential for us to do a lot of things on the tenement. I wouldn't want to constrain us on our potential, because these deposits are, they're where you find them, and they look how they look.
David, I think that pretty well summarises all the questions we've got, and I know we're probably going to let you go and pack your bags and get set for the trip. So thanks very much for your time. I know you're flat out getting things lined up here for the trip and the drilling program. Great presentation, and thanks to everyone who joined us today. It's been a huge turnout. I think that shows you, David, how much interest there is in this story and the following you already have, which is fantastic. And we'll be in touch with all viewers about our next webinar. Thanks again.